Hey everybody, JJ here. It is Friday, June 26th, 2020. Thank you for joining me. Now I'd like to thank a commenter for posting this. I actually noticed less credit card offers coming in, but didn't see this article. This came out a couple weeks ago. Credit card balance transfers are getting harder to come by. Now this could put a lot of people in a very difficult position once the government stops handing out extended unemployment benefits, once the stimulus checks are no longer coming in. And if we don't see this mythical V-shaped recovery that's been floated out there, what's going to happen to all these people that have been living off of credit cards? We know that credit card debt is at all-time highs, even worse now than before the 2007-2008 financial crisis. And a lot of people have been skating by getting balance transfers, by doing debt consolidation. Many people taking on home equity loans, especially with the mortgage rates. But credit cards, those are especially dangerous with the ultra high interest rate. Remember, the average credit card interest rate is about 17%. But according to the article here, and according to what I've witnessed myself, the number of solicitations offered, balance transfers with no interest for a set period of time, fell significantly in recent weeks. Now, what the banks are saying, they're being extra cautious because of all the job losses. But even people with good credit scores and excellent credit history are still not seeing as many balance transfer offers. Now, we reported on this a few times recently. Of the 100 million loans that are late on the payments that are in deferment, well, about 15 million of those was credit card accounts. And there's been a lot of complaints with banks not having customer service available, not offering flexible skip payment options, and not waiving late fees. Well, you can look at it from two ways. One, the banks should be there to help people in the time of this shutdown, this pandemic. Or two, it's not the bank's fault. The banks didn't cause the pandemic. Why do the banks have to change the terms of service in their credit cards and waive late payments and things like that? So it's two different aspects that we need to look at here. But think about that, 15 million people, and that was as of April. And with this new second wave of the shutdown, of the pandemic, of the illnesses, it's likely to start getting much, much worse. And I just feel really, really bad for anyone that has a credit card balance that they can't pay off in full each month, because those interest rates, again, are so high, usually around 17%, sometimes even higher. And now with the job losses and other impacts from the economy, we could see this snowball real quick. And I think the government's going to have to step up the stimulus checks in order to prevent a mass of bankruptcies happening before November. We know that November is typically the goal when it comes to the U.S. System here every 4 years, if you know what I mean. Recent headline here out of Reuters via Yahoo News: consumer spending rebounds, but falling income is a threat. So wages are dropping, income is dropping, but consumer spending is rebounding. Now, there is some problems in many states now that reopened, and it looks like many of them might have reopened too early because we're seeing a lot more cases pop up. Now, some of these skeptics out there will say that the rising cases are only because there's more testing going on, but nonetheless, there is rising cases either way, and that is causing some businesses to hesitate on the reopening and some businesses to reclose, to err on the side of caution. So we're going to see, still some pretty nasty job losses. And we look at our most recent unemployment number, it was another million that we found out, another million job losses. And many would have expected the job losses to decrease to less than 1 million per week, but we're still seeing it steady, holding above 1 million per week. So the recovery that some people were touting is not happening as fast as some predicted. And it may not be happening at all when you factor in that the government stimulus checks could make up for a big portion of all this so-called increase in consumer spending. So expect to see more government checks coming out. We think there's going to be more stimulus checks, more tax cuts, or more delays in the tax filing deadline. We think they're going to have to push that back even later than it is now, and more deregulation. And here's a recent article. CNBC article here: bank stocks surge after regulators ease the Volcker rule. And bank stocks did jump on this news. And this was a rule that was implemented after the 2007-2008 financial crisis. And essentially what it does, it frees up capital for banks to gamble. Now banks can more easily set aside cash that they previously had to have available to cover their derivatives trades. So now they can gamble more easily and keep this whole fake system propped up, right? But we do know that at the end of the day, when this thing finally does hit home, when it comes home to roost, this is just going to be a much bigger calamity, a much bigger crash at the end when the manipulation ends. Now let's take a look at this chart right here. This is U.S. restaurant bookings. The reopening is starting to hit some pretty big turbulence with the increase in the sickness cases. If you look to the far right here, you're seeing that restaurant bookings are now declining. So the reopening turbulence could be just getting started. This is going to be on top of the devastation that was already impacting so many businesses. And we could see even a bigger surge in layoffs, job losses, store closures, and bankruptcies. Let's take a look at a couple other recent bankruptcy notices from a couple businesses. GNC Vitamin and Nutrition Store. I'm actually surprised they lasted this long considering all the online option for buying vitamins and nutrients. But 1,200 stores, that's a lot of jobs. Right, so again, no surprise to me and probably many of you that GNC did not make this as general nutrition centers. With companies like Amazon, of course, Vitacost and Swanson, places like that online, that a lot of people now go and get their vitamins for cheaper. Also, big job cuts here out of Macy's. Macy's slashing over 3,900 white-collar jobs. That's 25% of its corporate workforce. So these are higher-paying jobs, corporate-level jobs. Where are these people going to go find new work? Are they going to have to change careers? Maybe they can all just work at Starbucks. Starbucks still seems to be really busy. Every time I drive by, it's cars through the drive-through because they shut down the inside. Cars through the drive-through, down the road, literally out the business parking lot and down the road. They're going to have to live off the government. Maybe many of them won't be able to find work. With the retail apocalypse that we're going to eclipse 2019 and 2018 store closures with everything that's going on, right? It's about ready to get very, very interesting to say the least, but also very dangerous. When there's mass poverty and job losses, it gets more dangerous, right? And I think a lot of the unrest that we're seeing right now is more than just acting out because of the behavior of the police. I think this is a lot of different things coming together. We've described it here before as a perfect storm. When people get financially stressed, and it's been happening for a long time, people living paycheck to paycheck, a big portion of the population living off the government, dependent on the government, right? A lot of political tensions. Now, of course, these are just a few small examples. We're talking about nearly 50 million people losing their jobs now just since the mid-March shutdown. But it's interesting, people think there's actually going to be some sort of recovery based on restaurants and stores and gyms opening back up. People shopping for clothes, sitting at a table, drinking a beer, going to a building and lifting some dumbbells and some weights. That's going to create this miraculous recovery, right? We need to get manufacturing. We have hardly any manufacturing here in the U.S., and people think that we can just continue to live off of a government paycheck, and that if we do some sort of universal basic income, that's going to be the solution. Well, it may be a solution for a short while, but what's going to happen when no one is manufacturing, no one is growing food? The cost of living gets so expensive because of inflation and lack of production that farmers are going to start going bankrupt in even larger numbers. Now, I would say get ready, because we're likely just now entering, and I think this is just the beginning of what's going to be a major, major economic meltdown. They're keeping it propped up for obvious reasons, but when they let this go, this is going to be the biggest collapse that we've ever seen in this country, maybe even in the history of the world. Because again, we have so many people dependent on the system. Look what happened at the beginning of the shutdown and what's still happening in many areas. People do not have food to eat. People are having to wait in food lines just to eat, just to survive. So we're going to see rising crime, hungry, desperate people, broke people. They're probably going to try to go out and see what they can find, if you know what I mean. So you need to protect yourself. It doesn't do much good to prepare to stack precious metals, to put away cash if someone's just going to break in and steal all these things from you. So security and your safety, number one. A lot of people are moving out of the cities, out into the country, or from the city to the suburbs. And we see just the beginning of what's happening right now. Right? Society is breaking down. And when the financial part of it hits full impact, it's going to get very, very dangerous. So be careful, everybody. Hope you stay well, stay safe. Thanks for watching this report. Bye for now.